5-star copies all. Go ahead. Message to observer. Alpha 3 rounds. AT delay in effect. 3 guns. Bravo 2 rounds. 2 guns. Smoke on effect.
Hey, what's up, y'all? My name is Andrew with the Options Millionaire Community. In this video, we're going to be talking about the number one way to increase your consistency, your profitability, and increase your odds of catching big trend moves. And that is using stops. The biggest mistake the average investor makes is to cut winners short and let their losers run, resulting in a lot of small wins and, unfortunately, very large losses that wipe your account. If you want to quit doing that, you absolutely have to use stops, stop losses, and trailing stops. I'm going to show you how I use them and how you can implement them into your system to better your trades. Now, before we start diving into the world of stops, there is a huge emphasis on system development. You need to be knowing why you take a trade, why you execute a trade before anything else. Because if you don't know why you got in, then how can you calculate when it's time to get out, other than simply freaking out about the amount of money you're losing, which is not a good way to trade. Now, having said all that, the most difficult time of a trade, for me at least, is the first few moments of a trade. Now, those few moments are dependent on the type of trade. Is it a long-term swing trade? Then yeah, it could be the first couple of days. Is it a scalp? Then it could be the first couple of minutes or seconds of the trade. Either way, those first few moments are telling me, am I right? Am I wrong? Do I need to be more patient? And that is where I start to set my stops. Now, there are 3 points at which you set a stop. Right when you enter, you automatically go ahead and set your stop loss. Now, the stop loss is going to be in negative territory, so you're going to be losing money if that stop loss gets tripped. Number 2 is your break-even stop. Once the price action starts moving in your favor, now you're going to move the stop loss from a negative territory back to break-even. And then, of course, the third stop is actually a trailing stop, which is now the trade is going in your favor, you're starting to make money, and now you're going to set a trailing stop based on the price action oscillating in your favor. Now, trailing stops themselves are an art, and it takes a lot of experience to really set these things properly, because we know that whether it's trend up or trend down, the market doesn't go in a straight line. On a trend up, you're going to have retracements. It's going to come back down. It's going to go up, down, sideways. And you have to play your trailing stop delicately, because if you're too tight, you're going to get stopped out very quickly. If you're too wide, you're going to give back too much profit unnecessarily. Either way, it's going to increase your profitability and increase your chances of catching a huge trend breakout. So let's take a look at an example. So let's say my analysis leads me to believe that this is about to break out to the upside. So I take an entry here at 45.08 on this ES contract. So now that I'm long, I immediately want to set my predetermined stop loss. For this situation, I would not want this price action to break below the prior pivot, because you could see when the buyers start to hit here on this prior candle at 07 4,500, I know that 4,500 to 00 level is going to be a naturally built support into the market. 2, I see that the buyer's volume started to hit this thing and started to really come along here and then hold this level. So I do not want to give out the prior natural support of 4,500. So this, I know if the sellers retrace this thing and take out 4,500, most likely this is going to break down below and start to sell off. And I do not want to be in that trade when that occurs. So what I'm going to do is immediately set a stop loss at 4,500. Obviously, my risk on this trade is 8 points. Now, I think the upside is going to be much larger than 8 points, so I'm willing to risk this 8 points to let this trade breathe, move around a little bit, fluctuate a little bit into a negative territory before launching. So let's go over and see what happens. Okay, so a couple of candles here. We have one big green. Immediately, the sellers hit it. The buyers hit again. The sellers hit it again. Then the buyers bottom wicket back up. So this is a good sign. This tells me that there's a lot of buyers on the tape here. We have high volume spikes. Every time the sellers try to hit, the buyers buy it back up. That's good to go. I'm still going to leave my stop loss on here until we get a little bit of breathing room here, because I don't want to bring it too close and get stopped out too quickly. I want to catch the big trend. So further, now we finally have our big extension away with the green candles. Now that we've got a little extension here, I don't want to start giving back too much profit. So the one thing I could do is bring the stop loss up to break even. Now I'm guaranteed I will not lose money on this trade. Save commissions, of course. Now, normally for me, I don't stay at break even too long. This is really just to make sure that this market isn't a liquidity grab and it's going to quickly reverse on back down. So what's happened here? We know that we've hit a little bit of supply. We have a top wick with some selling volume here. So we know that the sellers have hit at least a little bit and we have at least a minor supply. I don't want to give back 25 points here. So now I need to move my stop loss into profitability and creating a trailing stop. Now there's 2 ways to do a trailing stop. You could do it managed through your broker, which means you actually go into your order form and set a set trailing stop that'll execute automatically, or you can manually do it. Now, I usually prefer to do manual stops. I have done both, but I usually prefer to do it manually because I trust my system. So what I'll do here is actually bring up a limit order and set it at a predetermined price. In this case, I will move it up to know that I do not want this price taken out right here. We know that the sellers try to hit this candle and bottom wick back up, so there's still a natural demand in here, so I want to set it just under that line. So I'll set my trailing stop up, and I'll bring it up about right there, right under that line, where if they try to liquidity grab to the prior support, it won't trigger. But if it rolls over, it'll still trigger. Now, when I get a breakout like this, I tend to play a little conservative. I keep my trailing stops a little bit tighter. If you want to be more aggressive, aka catch a bigger trend, then you need to be a little bit more lax on your trailing stops. You need to be willing to give back a little bit more profit to let this thing move and breathe and chop down a little bit before rocketing. For me, I like to play it a little bit tighter just under the prior pivots. So obviously we have a little bit more supply coming in here. The buyers buy it back up, and boom, right out of the gate, the seller hit this thing. Now this would have triggered my stop. Now let's see what happened if that was a good decision. This thing sells all the way back off and puts in a new low, which is fine because now my trailing stop is executed and I gained about 15 points there, give or take, public math. Now there's one thing to remember here. If you want to catch a big trend move that keeps on going upwards like this, you have to use trailing stops. Now trailing stops are going to stop you out a lot like this, but if you apply trailing stops consistently and effectively based on a system, once or twice a quarter, it won't hit your trailing stop and you'll catch a massive trend in the market. 200-300 points on NASDAQ, 70 to 100 points on ES, and you'll have a career day. And all you need is once or twice a quarter. But this is a smart way to trade. You've got a predefined loss, so you're not sitting there holding a loss all day long. You're not going to blow out your account. And then every now and then you'll catch a big runner. Imagine setting trailing stops on this chart right here. You have a low stress day where all you have to do once you take entry is to set your trailing stop. And as the price action climbs, you just pop up your trailing stops little by little, little by little, little by little, little by little, over and over again until finally it stops you out, whether that be up here or down here. But eventually you'll get a day like today where it doesn't even retrace all that much to stop you out. And off you go, you catch 100 points on ES. People ask me all the time, hey, OM, how do you catch trends? How do you play big trends like that? And honestly, this is the only answer I have to give them, is set trailing stops, and then once or twice a quarter, you'll catch a big trend. Because I could give you all the technical data. Well, make sure you're buying on volume. Make sure there's enough flow. Make sure you're at a good support, blah, 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 blah. However, when it comes down to putting the iron in the fire and putting money on the table, none of that technical stuff matters if you can't manage your trade. It all comes down to trade management, risk mitigation, and the only way to do that is through trailing stops. Because I would never, ever advise anyone to white knuckle hold a trend without any stops other than the fact of, hey, I got lucky and held the trend the entire day. It's all through managing your trailing stops. And then every now and then you'll get one that doesn't trip your trailing stop and you'll catch a big trend. Trailing stops, if you want to be a real trader and make consistent money, use them. That's all I got for you. Check the links in the description of the video to come over and join the Twitter, the Discord channel. Please like and subscribe to the YouTube channel for all future content as well as our daily live streams. I hope you all enjoyed this video. Let me know if you have any questions. I'm out. See ya!